So today we're going to be talking about supplemental property taxes. Yes, in California, this is a huge deal, and it's something that catches a lot of home buyers off guard. So we're going to be covering what that is today and how you can prepare. Okay, so first of all, when you're buying a house, and I'm just going to do this all for California, okay? So you're buying a house in California, your lender is going to estimate what they think property taxes will be. Keep in mind, this is an estimate. Okay, now if you have an escrow account, meaning that your taxes and your insurance are part of your monthly payment, we're going to estimate how much we think your taxes are going to be based on the current tax bill and what you're purchasing the house for. Are we perfect? Absolutely not. We are not the tax assessor, so it's important to know that we are putting together what we think it will be to the best of our ability. Okay, and once again, California specific video here. Now, what happens when you buy a house in California is the county reassesses the property based off the purchase price. Okay, so if the people you bought the house from, they bought it at $200,000 and you just bought it for $2 million, you're gonna see a supplemental tax bill that's gonna be pretty substantial, okay? And a lot of this depends on the timing of the tax year, how long it takes them to reassess the property, seriously. So you would assume, oh, well, I just bought the property, so if I get a tax bill in the mail in a few months, it's gonna already have been reassessed, right? No, totally not. Totally not. Maybe it depends on the county. It depends how many people are working at the county. It depends if someone called out sick. You know, for instance, I bought a house in California once where it literally took 7 months for the property to be reassessed. So during that 7-month period, I was paying property taxes based off of the old owner's tax rate, which was much lower than what I had bought the property at. Okay, so I was paying this much lower amount for a few months. So guess what? When the county reassessed, they went back to the date of purchase and said, okay, well, you've paid us, let's say $500. Really, it should have been $2,000. So we're gonna send you a supplemental tax bill for $1,500. Okay, now the next question people ask is, well, doesn't my escrow account cover that? No, not necessarily. So an escrow account is meant to cover taxes moving forward. So in certain cases, like if it took a year or so, it never hurts to call your servicer to see if there's additional money in your escrow account. But what often happens, okay, and this is why you guys need to be prepared for this. What often happens is, let's say you have an escrow account, meaning that they're collecting your taxes and insurance. We've put together how much we think the taxes are going to be, but the county takes a year to reassess. Well, we're not going to keep collecting at that higher amount until they reassess, because legally we can't. So you would get money back from the mortgage company. I'm not kidding. So if you guys close on a house in California and you get a check back from the mortgage company that says, hey, you're overpaid in your impound or escrow account, you put that in savings. Okay, because what that generally means is it means they haven't reassessed yet. We're holding too much money in the account because there's a limit to how much we can hold. Okay, so the mortgage company has to reevaluate based on what we see the tax bill is. Even if they know it hasn't been reassessed, we have to go to what the tax bill is, and then we have to send you the difference and decrease your payment. No joke. Just so that in a couple months, you're gonna get a fat supplemental tax bill, and you're also gonna get something that says your escrow account is too low, we need you to pay XYZ, and your payment's going up. Okay, so as I'm sure you can imagine, people get really angry at lenders because they're like, you told me I didn't have to pay this much. Although I have to say, usually they forget that they got that check and their payment went down. I usually have to go, did you get a check? And they're like, oh yeah. And I'm like, remember how we talked about saving that? Yeah, so whenever you guys get a check from a mortgage company, save it. Okay, now this is only applying if you guys have an escrow or impound account, meaning that we're collecting your taxes and insurance monthly, okay? So those numbers are constantly changing because of federal regulation and because of stuff like this, where it's like, okay, we know what we think taxes are gonna be. We're collecting based off of that because we're trying to put you in the best position possible, but then some random county in California doesn't reassess for a year. Well, we can't hold a huge lump of money if the tax bill's lower, so we have to give the money back to you, lower your payment, but then they reassess and everything goes up. So then they want money and then we want money and your payment goes up. And you're like, oh, like honestly, it's why I personally don't have an impound or escrow account. Now, in different states, they are not as painful, but the first year it can be really painful in California because of this, because in my experience, most counties do not reassess fast. Okay, so if you don't have an impound or escrow account, those words are interchangeable, and you're paying your taxes on your own, you still can get a supplemental tax bill for sure. And once again, it's like the example of the house I was telling you about, where the first tax bill came, I paid it, but they hadn't reassessed yet. So I did get that supplemental tax bill, which once again, I had to pay. Okay, so it's important for you guys to know, number one, if you ever get a check back from a mortgage company because it says you have too much in your impound account, put it in savings, save the difference between your original payment and what they're saying the new payment is, because odds are it's gonna go right back up, and it could go up a little bit higher if you don't have that lump of cash ready. Okay. Number two, supplemental tax bills, it's your responsibility. It is not the lender's responsibility to plan for supplemental taxes. We can't. And the reason is we don't know when they're going to reassess, and we're estimating to begin with. So if you guys have if you're like, God, I need to know more though, Jen, like this is stressing me out, call your local tax person at the county. Okay, it's the tax assessor, and ask them for details, ask them how it works, ask them in their experience, when do you guys realistically reassess, and then plan for it. Okay, now if you don't have an escrow or impound account and you notice, and I'm saying, like, if you're looking at my estimate and I'm saying, hey, taxes are probably going to be $1,000 a month, start saving $1,000 a month, and make sure you've got a cushion in there for when you get the supplemental tax bill. If you get a tax bill and you're like, oh my God, Jen was wrong, it's so much lower. Jen wasn't wrong, you just haven't been reassessed yet. So I hope this video has been helpful. You can also, during the process, talk to your escrow officer. When you're buying a house in California, you've got title and you've got your escrow officer, and people really don't talk to them that much. They're really nice, they know a lot, and they can talk to you about supplemental property taxes as well. And it's definitely worth having the conversation because it's never a fun surprise. We always try to warn people, but at the same point, buying a house is so overwhelming that you forget a lot. So if you just got a supplemental property tax bill in the mail, because I know I'm going to get a ton of Google searches because of that, this is why you're getting that. And if you have questions about that supplemental tax bill, definitely call your local tax assessor. Is it your mortgage company's responsibility to pay that bill? No. Your escrow or impound account is not for supplemental. If there's extra money in there because maybe you haven't been refunded a difference, maybe they did it quick, it never hurts to ask, but there is no guarantee. Okay, so I want to be super duper clear on that. If you guys have questions or comments, as always, feel free to reach out. But California property tax supplemental bill, that was the explanation. Thanks for watching.